Welcome to the Deep Dive. We're here to break down corporate earnings calls, pulling out the key insights for you.
And today we're jumping into the Mercedes-Benz first quarter 2025 call, trying to figure out how they're navigating, well, everything that's going on.
Yeah, it feels like a complex picture right now.
It definitely is. I mean, the Q1 results show some, let's say, resilience in places, but also some big uncertainties looming, tariffs being the main one.
Okay, so let's start with the numbers then. What were the highlights?
Well, free cash flow is actually quite strong. EUR 2.4 billion.
2.4 billion. Nice. And that helped their cash position.
Yeah, boosted net liquidity to a pretty comfortable EUR 33 billion. So they have a buffer.
Okay, good to know. What about the car division's profitability, return on sales?
Came in at 7.3%. That's within their guidance.
And they put that down to efficiency programs.
Partly, yeah. The Next Level Performance program helped. Plus, they had a good share of their top-end vehicles, about 15%.
Right, that 15% top-end share keeps coming up. Seems important.
It really is. They've pushed that segment hard over the last, 4 years? And it's paid off in terms of margins, shows the brand's strength, you know?
Definitely. How about Mercedes-Benz Mobility and the financing arm?
Also pretty decent, actually. An 11.6% adjusted return on sales.
Even though volumes were down.
Exactly. They said product mix and cost savings helped there. But the story in China for mobility is different.
Ah, China. How so?
Intense competition, really intense. That pulled their return on equity down to 8.6% there.
Okay. So regional differences are key.
Absolutely.
But the big headline seems to be suspending the full year forecast. That sounds serious.
It is a big deal. They basically said the uncertainty around tariffs is just too high right now to give reliable guidance for the full year.
Okay, let's dig into that tariff impact. What did they actually quantify?
They gave some specific numbers based on current tariffs staying in place. They're looking at a potential negative hit of around 300 basis points on the car division's return on sales.
300 basis points. Ouch.
Yeah. And up to 200 basis points on the van side for the whole year.
Wow. And that includes inventory they already have.
Yes, that calculation includes current inventory. So the impact might, shift quarter by quarter. And they're still trying to figure out the effect of any newly announced tariffs.
Right, because the situation keeps changing.
Exactly. And that's just the direct impact they can sort of calculate.
What about the other effects? The indirect ones?
Well, that's the tricky part. They were clear that they can't quantify things like the impact on overall market demand or how customers might react or broader macroeconomic shifts.
So too many unknowns.
Pretty much. And that lack of visibility is why they pulled the forecast.
Makes sense. So what's the plan? How do they mitigate this?
They're working on it, developing short and medium-term measures, though they didn't give too many specifics for competitive reasons.
Understandable.
And they're talking to policymakers constantly, it sounds like.
Emphasizing their U.S. presence, I imagine.
Definitely. Highlighting how much they export from the U.S., SUVs from Alabama, vans from South Carolina.
That's a smart angle, playing up the Made in America export aspect.
It is. And they also mentioned exploring potential transitional relief from recent U.S. policy changes. So trying every avenue.
Okay, let's pivot slightly to product strategy. You mentioned the top end doing well. What's the overall plan?
They stick to their 3 segments. Top end, core, that's C and E class, plus SUVs and entry.
Right.
And the big news is the product offensive. Over 25 new models planned for 2025 through 2027.
25. That's a lot. Where's the investment focus?
Leaning heavily towards the top end. That's where they see the most profitable growth.
So updates to the big sellers.
Yeah, expect big things for the S-Class, the GLS, and also the first derivative from their AMG electric architecture is coming.
Ah, the electric AMG. Interesting. And they're happy with 15% top-end share, but want more.
Seems that way. They called 15% solid, but definitely pushing for more growth there.
And outside of tariffs, any talk about expanding U.S. production further?
Yes, actually. They mentioned discussions with the U.S. administration about potentially expanding the Alabama and South Carolina plants.
For what? More cars and vans, or?
Could be, but also potentially adding components, maybe even powertrains. Strengthening their U.S. industrial base seems to be a theme.
Ties into that regionalization trend we keep hearing about.
Exactly. They see deeper localization as key long-term, especially in big markets like China, but also adapting their global footprint generally for the next, say, 3 to 5 years. They're pushing the EU and Germany for more free trade deals, too.
Got it. Now, despite the strong cash flow, operating profit was down in Q1. Why was that?
primarily market conditions. They described it as a very competitive environment.
Meaning price pressure.
Yeah, price competitiveness had a negative impact, and they lost a bit of volume in cars, more significantly in vans.
Okay. But some offsets.
Yes, the product mix in vans was actually quite strong, which helped. And those early benefits from the Next Level Performance program we talked about.
Right, the NLP program. Let's flesh that out. What does it cover?
It's pretty comprehensive. Targets costs and efficiency everywhere. Personnel, materials, production, fixed costs, even how efficiently they spend investment money.
And it's working.
They say they're making good progress, and you saw some results in Q1 already. But they have ambitious goals through 2026, 2027.
So more to come, including like the staff reduction program.
Yes, that's part of it. Ongoing implementation is needed. They didn't announce any expansion of the program because of tariffs, but they did suggest they might accelerate existing measures if needed.
Okay, so they have internal levers they can pull harder.
Right. And that strong financial position, the liquidity, lets them keep investing in new products and tech despite the headwinds.
So specifically on customs issues, beyond talking to politicians, what are they doing tactically?
Looking at the whole model range, market by market, seeing where adjustments make sense.
Leveraging U.S. production, maybe?
Absolutely. Using that strong U.S. SUV footprint is part of the plan. They're analyzing pricing and model policies in detail, but keeping those cards close to their chest.
Right, competitive reasons again.
Yep.
Let's talk China again, specifically the EV strategy there. You said it's tough.
Very tough. The electric segment is weaker overall right now, and China is ground zero for intense price competition.
So Mercedes isn't joining the price war.
Their stance is focus on value, manage volume carefully, protect residual values. They don't want to sacrifice the brand for short-term volume by slashing prices.
Makes sense for a luxury brand.
Yeah.
What's the plan for EVs there then?
Big expansion coming over the next 2 to 3 years, starting with the new MMA architecture vehicles.
Like the new CLA concept we saw.
Exactly. And also electric versions of the GLC and C-Class are on the way.
But it sounds like combustion engines, especially hybrids, are still selling well in China for them.
Very well. High-tech electrified combustion engines and plug-in hybrids are apparently doing good numbers right now. So the full EV transition, especially at the top end, might be more gradual there.
Interesting. And that electric AMG is coming next year.
Yeah, first one on the dedicated AMG electric platform, supposed to be a real performance statement.
So with the overall shift to fully electric, that's still happening, but maybe stretched out.
Looks like it'll extend into the 2030s. They're still developing electrified combustion engines alongside the BEVs, keeping options open, catering to different markets.
Which brings us to BEV sales share overall. It dipped in Q1, right? Below 10%?
It did fall below 10%, but they see that as temporary.
They expect it to pick back up.
Yeah, starting next year and beyond. They reiterated their target of getting to that 20-22% share range eventually, driven by all the new electric models coming online.
Okay, and back to China, quickly, the competition there. You mentioned over 100 players.
Over 100 in the new energy vehicle market. It's wild. They expect consolidation over the next 5-10 years, obviously.
Is the government doing anything?
Some initial steps towards consolidation among the state-owned players, apparently. But the innovation speed, the China speed, is incredible.
How is Mercedes keeping up with that R&D pace?
They've really beefed up their R&D presence in China. Centers in Beijing and Shanghai. The Shanghai one focused on digital.
And that team works just on China products?
No, globally. They're contributing to all products. And there are plans to expand that China R&D foot further. Deep localization, like we said.
Okay, so wrapping up the investor perspective here. Suspending the forecast obviously signals major uncertainty, mostly geopolitics and tariffs.
Right. Investors really need to watch trade developments and the macro picture closely. It's the dominant factor near term.
But the strong cash flow and liquidity are a definite positive, a safety net.
Absolutely. Gives them breathing room to navigate this and keep investing strategically. And don't forget the strength in the top-end segment, that brand power is crucial.
True. And China EV is a challenge, but their value focus and new products could make a difference.
It's one to watch. How they execute that EV rollout against fierce local competition will be critical. And this whole need to adapt production globally for regionalization, that's a big strategic challenge, but also an opportunity if they get it right.
Okay, time for our This Is Not Financial Advice segment. Got an outrageous but plausible trade idea based on all this.
All right, how about this? Given all the tariff uncertainty hitting traditional car manufacturing, but knowing Mercedes has cash and is pushing high end, Maybe think about battery recycling tech company.
Battery recycling. Explain the link.
Well, electrification isn't going away long term, even with bumps in the road. Eventually, managing all those batteries sustainably becomes huge. Mercedes, needing to secure supply chains and handle end-of-life costs, might look to partner with or even acquire a leader in battery recycling down the line. It's a long-term play on the circular economy aspect of EVs.
Interesting angle. Playing the long game on the supply chain and sustainability side. Okay, plausible, if definitely speculative.
That's the idea. Outrageous but plausible.
All right. That wraps up our deep dive into the Mercedes-Benz Q1 2025 earnings call. We've hit the results, the tariff troubles, the strategy shifts.
And even a slightly off-the-wall trade idea for you to consider, or not. Remember, do your own research.
Absolutely. What are your thoughts? How do you see Mercedes handling China? Will the tariffs ease up? We'd love to hear what you think.